Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. And today we have a great show. Anthony is joining us today from, I think, a warmish place. I hope warmer than New York, I hope. And he'll be talking about mastering confirmation indicators. So without any further delay, let's just bring in Anthony. How you doing, Anthony?
I'm doing great. I've got our club's biggest golf event over the next 3 days.
That's great.
I've got the golf gear on. I'll be in there this afternoon. I'll be playing the next couple of days, so wish me luck.
That's a beautiful place that you have there. You were kind enough to take Mike and I out that last year, and just excited for you because that's wonderful. So this is Thursday. It's Friday, Saturday, Sunday. Is that what it is? Or?
Yeah, Thursday afternoon start, Friday, Saturday. It's 5 rounds, match play. So
oh my gosh.
I'm excited. That's right. I forgot that you and Mike were at my club this summer. We had a great time.
Yeah, that was fun. Well, I know you're probably in nowhere else on earth is probably heaven for you like that, but at least the next 2.5 days. So good luck with that. But looking at the charts, looking at what you're talking about, really interesting concept today. I really enjoy it, especially as a technical analyst, I like to look at different things, and this certainly serves that purpose.
Yeah, I wanted to bring this up because I put a tweet out the other day saying that I use the VWAP, but it's not my strategy, right? And I want to make clear to people to understand that when you build a strategy, at least from my perspective, and other people may disagree with this, and that's fine. That's what makes markets. When I look at a strategy, I look at my strategy as a directional lead. Like, what direction do I want to be in? Okay. And so when I build my strategy, that's my primary goal, right? Give me the direction that I want to be in the market. Give me my bias of direction. Or at the minimum with a strategy, give me the market environment. Is it bullish, bearish, neutral? Give me some indication of direction. And when you look at confirmation indicators, I think such as moving averages, RSI, order flow, cumulative delta, which we've talked about a lot, order flow VWAP, those to me are confirmation indicators because that's what helps you better execute the direction that you want to be in the market. Now, some people might use those as their primary lead for direction, and that's fine. But that's their strategy, right? And so the difference is that what we're going to focus on today is using indicators to help you become a better executor. Because, it's funny. I actually years ago would only talk about execution. And it was funny because a lot of people didn't really even understand what that meant. They were just, I remember when I first had gotten on social media, I was like, execution, pounding the pavement on that. And a lot of people were like, not that they don't understand that you have to go and execute a trade, but understanding really, I would say the philosophy behind it is everything works sometimes, nothing works all the time. I've said it a million times on Develop Your Edge, but where you really make your money is in the moment of executing, right? Because I could tell everybody on this show, I think Russell's going lower, or I think ZN's going lower, or I think NASDAQ's going higher, and I could put a target out there, I could put a support level, and you could go out there and you could lose money, even though that ultimately works, right? And so we've all been there. And so ultimately it comes down to how you execute the strategy. And that's why confirmation indicators, to me, are so important to add to any strategy that you have.
Yeah, I agree. And you certainly threw out, some really interesting ones, and I think crucial to intraday traders. Some of those studies you threw out there are vital. I mean, we have people on our daily shows that ask about order flow. And I think that is just key to understanding this confirmation that you say. It's like just as an aside, my daughter is going through driving school. And so before you execute a turn, you have all these indicators, right? And she's got her ideas about that and what should be, but it's the same thing, right? You might want to turn right, but you still have to look left. You have to look and see if there sirens, are there lights, are there oncoming traffic, whatever it is, before you execute. And this is kind of the same thing to me.
100%. And I'm just going to continue to pound the pavement today on confirmations, because confirmations will come and go, I think, throughout a trader's journey, meaning that sometimes you'll be really keen to use X, right? Like I've used MACD in the past. I've used Williams percent R. I've used other indicators throughout my years for confirmation, right? But ultimately, my strategy has really stayed the same for over 20 years now. And that really stems and starts with Bollinger Bands. And it's, once again, I go back to strategy, directional, confirmation, help with execution. Let's go to the charts here, because I want to show something, because I think that showing where we are right now, showing the things that we've talked about in the show this year so far, even though it's only been one show prior, just going over where we are with everything right now in the markets. And what I think is really interesting right now is we really have a tale of two tapes. I'm going to plug my Discord. It's free. You go in there. I've been talking about this a lot lately, and how in my morning note, once again, it's free, where I talk about market environment and where I'm looking at directionally in the market. And it's really a tale of two tapes. You have NASDAQ, once again, trying to be strong. You have Russell being weak. And Russell, I have noticed, is very attached to the 10-year. And so my focus the last couple of sessions has really just been focused on Russell and 10-year, because I feel that's where I have an edge from my strategy. And then my confirmation charts are giving me a reason to step in and execute them. And so let's start off with the daily Bollinger Bands. Here we are. And I'm starting off with 10-year because, number one, we had a CPI number come out this morning that came in a little hotter than expected. Once again, I'm not your macro guy to tell you what that means in the scheme of things, right? But what we want to watch for is, what was the reaction in rates? Why rates? Well, because let's look at the end of last year. The biggest reason we rallied, it doesn't really matter if it's the reason or the why or not, but in addition to why we rallied at the end of the year, was because the possibility of 3 rate cuts this year, and it even got bumped up to 6. The Fed says 3 in the dot plot, 6 is what comes from CME's Fed Watch tool. So the market is really anticipating 3 to 6 rate cuts in 2024. The market took that as a bullish sign. Take it for what you want. Doesn't matter, once again, if that's the why or not we rallied, but it is an important part, especially when it comes to the Russell. Now, when you look at the market, you look at the 10-year. The 10-year is important because it's really the key benchmark when you're looking at rates. Because to me, it is the biggest market in the rates market. I mean, I know you may say the bonds and whatever, but a majority of the day traders are trading 10 years or 10-year ultras. Okay. And so when you look at this, I want to see the reaction to the CPI. I care what the CPI is, whatever, but it's more about the reaction. What happened? And I'm going to go and I'm going to look at my strategy. Remember, Bollinger Band peaks, 20 period, 3 standard deviation Bollinger Bands. I look at the peaks and I look at what my what my Fibonacci tool, which is going to be 30, 50, and 70%. And I've talked about this a lot lately, even in my Discord. It's a mean reversion tool, meaning that once these Bollinger Band peaks come in, there's the environment that we're in is mean reversion. Why? Because instead of range expansion with Bollinger Bands going outward, Bollinger Bands are coming inward. We're mean reversion. We stay below this 30% line. It is an indication that we're probably going to hit the 50% line, which comes in right around 110.25. I know that the fib is not showing the right number there, but that's what it comes in at. Okay, so I'm really looking for us to potentially pull back in that area. That would, to me, would be a completed mean reversion move in 10-year. So we're staying below these areas, and we see a CPI number where the market comes out, where the market came out and sold off. So I go to my confirmation. So I see this on the daily, and when you look at the daily, it almost blends into the day. You're like, okay, what's going on here, right? Then what I do is, so that's my strategy. Then I go and I look at my confirmation indicators. This is my shorter time frame. This is just a 60-minute. And I talk about the anchored VWAP to the beginning of the year, and this has been key. I talked about earlier in the show this last week. I said my one stop out this year was when I got short the 10-year on this bounce right here, and it got stopped me out because it got above the VWAP for the year because I'm trying to stay short, whether it's swing or intraday and 10-year, because I think that 110-ish, 25-ish area could test. We continue to push lower, hit it, break. Hit it, break. I mean, little slippage above it, a few ticks here and there. You got to be smart. I put moving my stops that's why I like standard deviation bands, really just above these standard deviation bands, and I look for them to continue to rotate lower. This morning I came in flat, market zips above it, and then boom, right when it got below the year-to-date VWAP, I actually posted my my trades. I was actually not able to sell it until it was several ticks below it, but I sold a decent position, scaled out to standard deviation. I put those trades in Tradeovate. You can see that in my Discord under the rates channel. And when you look at this, to me, it's this help guide me in the short. This is a confirmation indicator. What is the VWAP doing? Okay. Where are we trading relative to it? What is cumulative delta doing in RSI, which I'll get to that next. And it just helps me execute. If I just try to be short today because my strategy on the daily says be short 10-year, I probably would have been short going into I probably would have been short going into the CPI number. But nonetheless, I might have lost money. I waited for it to get below the VWAP. It proves to me now, proof. This is the key with a confirmation indicator. Proof. It gets below the VWAP. And once it does, it's now confirming my bigger picture bias in a shorter term time frame with the volume weighted average price. So a confirmation indicator proves to me that in the moment of execution, that it is agreeing with my strategy.
Now, Anthony, that you put up you made a good point there. Trading before the number, we don't really like that. We don't recommend that.
No.
But after the number came out is when you executed, correct?
Yes.
And that's when we saw that move down eventually, right? It was, I think, on the bonds, it was more of an uptrend than a downtrend initially, and then it came back down.
Correct.
Yeah.
Exactly.
So you were waiting for the number. See, that's the thing is if this were a normal trading day and that happened without news, yeah, you might have gotten stopped out, right? Because you're trying
absolutely.
that VWAP is holding as resistance. You want to get back up to VWAP and then take your trade. But here, the CPI number coming out actually helped you a lot.
Yeah. And, because here's the thing. I wouldn't have been short going into it either way because we're above the VWAP. And I'm going to show you something else. Let's look at a couple of things here. Let's go back to additional confirmations, right? I mean, first of all, this was like in the overnight trade where I'm trying to get my beauty sleep time, I'm trying to, so I wouldn't have been in much here. If I would have been in a swing position back from here, which I was yesterday, swing, it was really more of a day trading position. I covered it because I'm like, it's CPI tomorrow. I'm not holding this overnight. And so you just start, sometimes it's just about being smart, right? I mean, I get lucky that I cover them somewhere in here and the market goes up overnight. I don't know. They could have been way down here. Who knows? But nonetheless, watch cumulative delta. When we're above the VWAP, you see the buying starts to try and build. Look at what happens immediately below the VWAP. You see the biggest selling every single time. Look at it right here. Build up, build up, build up, push above it, bang. I mean, this is where you get into confirmation, order flow, VWAPs, and also RSI. When the market tries to build getting up to a VWAP and you see it gets slightly overbought on the 60-minute, right. Okay, right at that 70 level, which we look at 70 or greater for RSI to get bought. And then bang, sellers come in again. And so this is a great confirmation because it goes back to, am I going to sell an RSI or sell a market because our RSI is overbought? No, I'm not going to sell RSI because it's overbought. I'm going to sell a market if the RSI gets overbought and then we get below a VWAP of cumulative delta supporting it. That's confirmation. right? That could be just your strategy where you say, I only sell if we're overbought RSI, cumulative delta, then starts to get selling below VWAP, or vice versa on oversold, buying above VWAP when we get oversold and cumulative delta supports it. I mean, that can be your strategy. It's not for me because my strategy starts with Bollinger Bands. Bollinger Bands tell me market environment. They tell me bias of direction. Once I get into the shorter term charts, I need to become a better executor of that direction, period. Right? And so that's what confirmations are for. And as a technician, Tom, I mean, indicators far better than I do. When you look at all the span of indicators, I would say that a vast majority of them are really built for confirmation.
Oh, I would agree. I would completely agree, right? A lot of these indicators aren't necessarily trying to pick uh, you know, uh, 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 high points, low points. It's a lot of them are lagging and they're after the fact, right? And so they are confirming that trend. They are confirming that bias that you're identifying for sure.
Yeah, and I want to take it to another level. So I've been talking a lot about how the ZN and the RTY are markets that I'm watching together, right? I didn't trade Russell short this morning. It was a little bit too weak for me, but let's talk about how they look together on the daily. And I go back to this. This goes to, if you want to be a trader, this is develop your edge. If you want to be a successful trader over time, I'm not saying you have to know macro. And I'm not saying you have to really understand all these different concepts that are happening in the market, but it does help to understand a theme, right? I've always said I'm never going to be the smartest guy in the room when it comes to knowing exactly the underlyings of what's happening and why it's happening in the market. I don't really care that I'm not that person. I just know that when I see things that are working together, I take advantage of them. I mean, that's just the way I've built my entire career. I've never been the smartest, but I look at it and go, if this is working and it's working in my direction and I'm making money, I press it. I mean, that's what I do. And so when I look at the 10-year, okay, I go back to this on the daily and I say, look, I've been successful selling rallies in this market this year, besides maybe one time where I really kind of got knocked around on it. For the most part, my win rate's pretty good because I've been selling rallies, waiting for these confirmations to help me get in. And what I also notice is I look to mirror what's happening in another market, the Russell. Now, the Russell is the small cap stocks. Now, Russell stocks are going to be a lot more sensitive to interest rates going up because Russell stocks borrow more from banks. If you look at NVIDIA and Apple, they have more money. They're basically like a bank. Higher interest rates for them don't hurt them because they're just making money out of their hundreds of billions of dollars or trillions, whatever, right? And so it doesn't impact them, which is why in an interest rate environment that you watch, tech stocks are going to be something that just don't get impacted as much. Okay, but Russell does. There's a sensitivity to it. So it doesn't necessarily mean it's the end all be all, but when 10 years moving with Russell, I look at that and go, man, if 10 years down ticket and I get a short indication on Russell, that's a confirmation. So now you have confirming markets. Okay, if the Russell and the 10-year are working together, that's confirmation. And this is about mastering confirmations, right? So sometimes it's not just indicator, it's market confirmation. So when you look at 10-year and Russell, if they look similar on the daily, the Russell's actually a bit weaker. I am looking to sell the Russell the days that the 10-year is going down. Because if rates are going up with 10-year going down, the Russell's going to be more sensitive. It just adds confirmation to my direction, which as you can see here is bearish because we're below my 30% line. We've actually hit and held the 50% line for now, but we're staying below the 5-day moving average. And when I go to the Russell, let's look at that year-to-date VWAP, Tom. Look at that, baby. There has not been a time where it has been able to hold above it from the open. So what's the weakest index? Russell. Period. Okay? You're getting multiple confirmations. Confirmation from ZN, confirmation from VWAP. Why would I try and sell NASDAQ or S&P? I'm not even looking at selling them. I don't want to short them. I have no interest in it, right? Let's go to the S&P and daily chart there. Look at where they are. They already hit 50% basically, came back up and are sitting around resistance, but above the 5-day, and they're going to be above the VWAP for the year. You look at NASDAQ, same thing. They're bullish. A tale of two tapes. So these markets, I'm not getting really enough strong confirmation to be long them, but Nonetheless, I know damn well don't short them. I won't short them. I won't even look at them short. So at the end of the day, it is what it is, right? I mean, look at your confirmations. I was mostly short ES, only short, well, not only short ES, but I was short ES and trying to get in and out of Russell as well the first week of the year. But the ES was my biggest winner, short. Now I won't even look at it short really until I see more confirmation. Confirmation, everybody, right? That's the key. Markets come in and out of environments so fast these days. It's kind of crazy, and it's really why I love Bollinger Bands so much, because it keeps me in tune with the now. Is volatility contracting? Is it expanding? Where are we on a relative basis to my my beacon levels, which is just those fib levels. It's just, I call it beacon because it shows me the direction, Tom. That's
Right.
why I call it that. But ultimately, hopefully I made my point across that, when you have a strategy, put in some confirmation, it'll help you be a better executor.
I love that term beacon. I think you should trademark that somehow. I don't think I've heard that before, so this is great. I have a question though. Looking at the Russell on the daily chart like you had, it looks like the Bollinger Bands are a little more contracted than the 10-year. And you said that we're finding support at that 50% retracement of those, of the bands right there. That seems a lot weaker to me than the 10-year. Would you trade the Russell over the 10-year, or are we talking, two different markets? You kind of keep them separate. You're not really considering you could go short both, or you're going to go short one over the other. What's kind of your take with that?
So let's look at today. Today's a perfect example of this, of where can I best manage my risk in the market that I want to trade, right? So I want to be a seller in RTY and I want to be a seller in ZN. That's my current mindset coming into CPI. Watch the number, see what happens. At the end of the day, I'm going to go to the one where I can manage the risk the best. I've also mentioned in the past, I like ZN a lot on days where we have news, because the book is super liquid. Not that RTY isn't, but it's going to move a lot more. And it's a lot bigger of a book. And so when I look at it, for me, I could size up a little bit and know that if it goes a couple ticks against me, I'm immediately out. And I'm not recommending this for everybody to do it, but for my trading and on a personal note, ZN is much better to trade on a day-to-day, because that book is just not going to get sloshed around as easily as like the Russell, right? And so it's extremely important for me if I'm trading some size and if I want to get into some bigger positions, that I have the market that I could turn and burn out of as quick as possible, right? Like I go back to ZN today, it's like by the time I was even able to sell ZN, it was like 112 like 02 to 111.31. I was looking at that area. I didn't able to start selling it to like 111, like 29 and a half, 28. Those were the areas. I mean, by the time it was going down, now the difference is I'm not scared to sell into a break in here, because I know that if I just put my stop immediately up there, it's not just one tick in me instantly. Okay.
Right.
So there's like price really, really matters here. Right. And so it can happen, but once it gets below it, I'm like, I have no issues just stepping in and just putting a tight stop, because if it does get me out, I want it to get me out, right? And so versus like Russell, and the difference is I was able to manage my risk really tight here above this VWAP. When you go to Russell today, it's like, I mean, by the time I even looked at it, I'm like, dude, there's no way. I mean, what am I going to sell them at 19? I mean, I'm selling them at one standard deviation already below, or to stop up there. Even if I put the stop in, it might just go and ding me. I don't need that in my life.
Right.
Right. And so that's really what it comes down to. Like the Russell is a weaker market overall, but the risk reward for me is so tight. I'm asking for a 2 standard deviation move off of a VWAP on CPI. I'm selling into this here. My stop's super wide. It's like, that's a tough trade.
Right. Okay. No, that's great. That's great. Um, you mentioned order flow, cumulative delta, RSI. We could use our own confirming indicators, right? If I use MACD, if I use
Oh, yeah.
CCI, we could swap those out.
I go back to it. A majority of these indicators are their lag indicators are lagging anyway, right?
Yeah.
And so by nature, they're really all confirmation indicators. Was that a good high? Was that a good low? Is there divergence? What's
Right.
going on here? So I look at it like this. that it doesn't matter what indicators you use. I don't think it matters at all. I mean, I think it's just a matter of consistency and repetition and understanding how they work on a market, how they work in certain environments. I actually, tweak my Bollinger Bands. You guys know that I anchor my VWAPs in some specific areas. Cumulative delta is pretty straightforward. I think that's an ad that everyone really can have and utilize. That's why I talk about it so much here, because if cumulative delta is one direction, like even today, it's kind of interesting that Russell is more net on the buy side than the sell side. So you're seeing as we come lower, there's people coming to the marketplace to buy Russell. And you can see over the past several days, that's been the case. Russell keeps getting buyers, but this is actually kind of interesting and something to talk about. The fact that you're accumulating buyers in long positions, but it can't regain the VWAP, that's not good. Imagine being a long player who's been buying RTY, and every time it gets up to resistance, it comes right off.
Right.
At some point, you might get a little puke squeeze here, and on that big puke squeeze lower, that might be the time you buy it, right? I mean, cumulative delta is very helpful in painting a picture. So, because I could see where bigger players are having success. Are they getting success achieving above areas? Are they not getting that, like you're seeing here? And so, once again, it just doesn't matter what indicators you use, everybody. Just get really, really good at executing and using those indicators on your time frame and understand market environments, how they work in different markets. That to me is the skill set you need to develop as a trader. That's where you really develop edge, is finding a way to use the RSI in a specific instance better than you did before. I mean, that's what it comes down to, right? I mean, that's it. I mean, I'm never using anything fancy, and and it's like I'm wrong a lot too, but it's like I find myself in situations where things are really working and I take advantage of them. And at the end of the day in this business, that's really what it comes down to, right? I'm going to be wrong a lot, but when they start working my way and I see them, I just keep trading that direction until it's not working. I'm not thinking too much right now. I'm selling rallies in RTY and ZN until proving me wrong. I mean, that's just it. I know not to sell S&P and NASDAQ because they're proving otherwise right now in the charts, when a week ago, all I wanted to do was sell S&P. So
Right.
you got to be nimble.
Love it. Love it. And you're right. Just whatever you're familiar with and get good at, that's what you want to use for your confirmation indicator.
Yeah.
Appreciate this, Anthony. I think you have a little bit more business to take care of, right?
Well, what I want to talk about is, every week at the end of the show, I talk about whether it's a product or something that's going on in the marketplace that I think is important to point note at. And micro Bitcoin, I think, is a great product to use. You see Bitcoin on the move. There are the Bitcoin futures. They're a much bigger product. Micro Bitcoin is $1 per, so it's $1 per tick. And so to me, if you're looking to either hedge your Bitcoin or trade Bitcoin, micro Bitcoin futures might be a great product for you. And there's a ton of volatility, obviously, right now in Bitcoin, but it's once again, if you're somebody who's holding Bitcoin and you want to hedge against your Bitcoin, micro Bitcoin can help you precisely hedge it. And also, if you just want to day trade it right now, instead of stepping in that big contract, you have the opportunity to trade the micro Bitcoin. And I just wanted to point light on it and let people know that there is a micro Bitcoin and micro ETH future. All this talk about the ETF and all of that, whatever. Crypto is not really my speed, but if you are looking at cryptos, make sure you look at the micros. Great products.
Yeah, it makes sense. And with what's happening with the SEC and regulation, Ether is supposed to be the next, well, not supposed to be, but it's speculated that that's the next regulated market that the SEC will discuss. So it's getting a bit of a bid that you might not have expected this week when SEC finally allowed the Bitcoin ETF. So, but great point, I think, on using Bitcoin to hedge your positions, whether it's an actual Bitcoin position you have or even with the ETFs.
Yeah, exactly. Yeah, and I'm old enough to remember, Tom. It's kind of interesting just to comment on this ETF thing. That when I remember when Bitcoin and ETH were all about decentralization after 2008, and I started actually following Bitcoin around 2014, I think, is when I started to get note of it, because it was at all these futures conferences and crypto.
Right.
And it was kind of interesting, and how now it's really just become, it's just it's a product out there that they want to have regulated and accessible for all these big funds and everything. And so I find that kind of just interesting. What was once Bitcoin is now a new Bitcoin, in my
That's
opinion.
right. That's
Very
right.
different.
Well, thanks, Anthony, so much. We've hitting up against time. We'll do this again next week, but I want to thank you. Where can people find you?
Go to anthonycrudele.com. That's where everything is. You can go to Twitter at Anthony Crudele. Watch for the fakes. I've got a free Discord to follow up on a lot of stuff I do here and Develop Your Edge. It's free. The community is growing. We've got almost 3,000 people in there right now, which is great. It's only been a few months since we've had it. But I can tell you, I'm doing live streams in there and people getting a chance to talk with other traders. I love it. I said in my Discord the other day, it's given me this new sense of community. And so I'm really enjoying it. If you're a Discord person out there, like I said, I'm relatively new to it. I only started this in October, but I'm really enjoying it. You can come and check it out.
Awesome. Thanks for that. And thanks to the viewers for coming and watching the show. We will finish the day with Mike Burke at bars closing 3:15 p.m. today. In the meantime, have a great trading day.